Happy Friday, everybody. I hope you had a great week. Today is January 20, 2023, and thanks for watching today's Friday planning video. I'm going to take a quick break from the Secure Act 2.0 news today. There are more reports on that part of the law. No wonder the whole law contained over 4,700 pages. I'll come back to some planning ideas on how to properly take action in line with the new law. We'll talk more about that in the coming weeks. Let's talk about planning in 2023 and a few items that we should look at as opportunities as we start the new year. Two topics I want to talk about today: cash management and asset location. Not allocation, but location. Let's jump in and talk about cash management, something we've been talking about for years, but it's become a much different discussion. Over the past few years, we've done all we can to make sure all of your money is working for you. I hope you recall the conversations. There are the emergency funds that are working on POM, that's peace of mind. That's not always the highest interest rate, but it's a high liquidity for emergencies. As the name implies, that's what we're looking for. As I've told you, this money, this is the money that if you have no emergencies, we'll look back and we'll say, why do we not invest that money? That's not the way I suggest you look at those funds, so we'll look at those. Today, in 2023, after the Federal Reserve has raised rates faster than any time in recent history, it's a somewhat different conversation. Rates for cash on the sidelines for those emergency funds and other reasons, which I'll address in a moment, are much higher than they've been. For purposes of the longevity of this video, I'm not going to speak about specific places or investments to put your cash or save money, or the rates that are being paid specifically. Instead, I'm going to touch on something that has been part of conversations for years. Should you have a cash allocation? How much? And what type of vehicle should you seek out for this holding in your portfolio? We've had these conversations over the years. As I bring you what I've called Tales from the Front Line, the conversations you recall 18 months ago was, why do we have that cash in the account at all? You'll also recall that I told you that there was an allocation that needed to be in cash, and more importantly, you need to have that cash working for you if possible. 18 months ago, there was a different conversation about how hard it was working for you. You may recall the rates on cash, even in high-yield bank accounts, was about 0.75%. The conversation was about TINA, otherwise known as there is no alternative to stocks, that is. We've had this conversation through every bull market, and that is why we come back to proper asset allocation and getting it right for each and every one of you. As we get going into 2023, we're going to once again dig into this conversation. We'll try to balance the conversation because I've mentioned on this video a few months ago, recency bias can be dangerous. Recall that this is when our memory is biased by recent events and not historic events. When we have our planning meetings, we'll watch what is going on now, but we'll also zoom out a bit and once again talk about what your time horizon is. What are we trying to accomplish as specifically as possible? This should sound familiar. There's a saying that I've used for a long time, and as we're coming off a pretty ugly 2022, there's a bit of shock. For the past decade, your performance has been stellar. Don't mistake a bull market for brains. This is just getting that recency bias, it's recency bias, and we're balancing it. So wrap up on cash. We need to talk about where it fits in your plan and how much you have to have on hand for expenses, for emergencies, for market fluctuations, and even just for asset allocation purposes. The conversation today includes U.S. Treasury bonds all the way to high-yield money market funds and bond funds. We'll discuss how to make sure your hard-earned money works for you. Finally, for today, asset location is a topic we'll dive into on these calls more and more, but let's remind you, I don't give personal tax advice, but I look forward to working with your tax advisors to help you with a long-term tax plan. This is often overlooked, and certainly from an asset location side, it's not dealt with enough by so many. Simple definition is when you choose where to hold what kind of assets and investments, where to hold your aggressive stocks, where to hold your dividend-paying stocks, bonds, cash, and all the holdings you may have. This is not the estate planning questions, as in how to title them. We've talked about them before, and we'll do that again. This is a tax question. Do you hold this in a traditional IRA for tax-deferred growth, a Roth IRA for tax-free growth, or taxable account? This goes for the now and the later scenarios. If you're thinking about the estate plan, how we can work with your attorney. I don't advise on legal matters either. How do we work with your estate planning attorney to get your assets so that your heirs are not burdened in the future with taxes? As you can imagine, this is not something I can give direct rules of the road on video. So these are conversations I want you to think about as we're going to discuss them when we meet. For now, please keep in touch. It's hard to believe the end of January is already on the horizon. Do you have financial planning goals for January, Q1? Let's talk about them. Come back Monday for the Money Market Update, and we'll also be back next Friday with more planning ideas. Have a great weekend.